Hello students, how are you all? I hope you are doing well. In this video, we are going to discuss CA Foundation Accounting Problem Solving Technique. For few chapters initially, they are bank reconciliation statement, rectification of errors, inventories and depreciation and amortization. As you know that our accounting is a practical paper which requires solving the problems in the exam. Even you get 15 to 20 marks of theory questions in the accounting paper, the rest of the paper must be solved practically. To solve the problems, first of all, you should have the conceptual clarity. After having conceptual clarity, next important aspect is how to solve the problem, how to start the problem and how to end the problem in the exam. See, if I give one problem from final accounts or partnership accounts or NPO or incomplete records, you can solve the problem if I give 1 hour or 2 hours time easy. But in the examination we have only 3 hours time. So how do you solve the problem in the examination, all the question paper in the examination within these 3 hours? That is very important. For that you need to frame a strategy. So every chapter will have a separate strategy, where we start and where do we end. Most of the students, they start the problem but they don't know how to end the problem. That's why most of the students will face difficulty in solving the problems, especially accounting paper, right? So here I have given a unique strategy for starting the problem and ending the problem. Initially I am uploading, we are uploading these four chapters. After that we start uploading for the remaining chapter also. Is it clear students? So, and these chapters, BRS, rectification of errors, inventories, depreciation and amortization, are damn sure questions in the exam. I hope you get most benefit from this video. So watch the video till the end. Okay, right. Now we discuss one example to understand how the BRS problems to be solved. Let us take cash book and passbook. Here I am taking cash book opening balance as 1 lakh debit balance. Cash book debit balance means this is favorable balance. This is favorable balance. First time we assume, when the cash book is showing debit balance, automatically the passbook shows credit balance. This is our assumption. When cash book is showing debit balance, passbook shows credit balance. Opposite na? Passbook shows credit balance. Opposite. Same amount. We have discussed the same in this example. Look at bank balance as per cash book 50,000 debit. Bank balance as per passbook 50,000 credit. Okay. Now look at. Okay, sir. Now here I have taken one transaction. That transaction is check deposited into bank. Check deposited into bank. So what is the entry we record? The entry is recorded in cash book as well as in the passbook. Who will record this transaction first? In the cash book. Why? Because we are depositing check na. What is the entry we record? Simply bank account debit to debtor account or customer account, whoever it may be, the person who has given check. Or if we receive that same check for income purpose, that income account credit. Anyway, bank account is debited now. So on the debit side, simply I have written to check deposit 50,000. To check deposit 50,000. The same entry is recorded by the bank on the credit side. The same entry is recorded by the bank on the credit side only when it is collected the check. This concept we know now. Only when it is collected the check, then only it is recorded by the banker. Okay, sir. But here bank did not collect the check. Bank did not collect the check till the preparation of BRS date. Assume the BRS we are preparing on 31st March 2025. We deposited check on 26th March. on 26th March. This date we take 1st March. This is also 1st March. Fine. We take like this. First March. Okay, fine. Right, sir. Now observe, as per cash book, how much balance you have? Tell me. Balance cash book and passbook. As per cash book, the balance is 1.5 lakh. As per cash book, the balance is 1.5 lakh. By balance C by D, 1,50,000. Whereas, as per passbook, the balance is how much? Tell me. The balance is 1 lakh. To balance carried down 1 lakh. Fine, everybody. But observe here, cash book is showing 1.5 lakh favorable balance, whereas passbook is showing 1 lakh favorable balance. There is a difference of 50,000 rupees balance. There is a difference of 50,000 rupees balance. Now observe cash book and passbook and tell me what is the reason. The reason is simple, sir. We deposited checks. The same check is recorded in the cash book, but bank did not collect the same. That's why bank not recorded the entry. Now how do we prepare BRS with this? Means first, heading is important. Bank reconciliation statement of so and so business. Bank reconciliation statement of so and so business as on so and so date. So and so date means the BRS preparation date. BRS preparation date. Here you have cash book balance as well as passbook balance. You take one book balance. So here I am starting with 1.5 lakh. This is called starting point. This is called starting point. Now you people tell me, the starting point may be either cash book or passbook. Practically you have two book balances, but in the examination they may give you only one book balance. In that case you don't have any choice. Okay, and you ultimately get which book balance? Other book balance. If you start with cash book, you get passbook balance. If you start with passbook, you get cash book balance. And this is called ending point or target. This is our target. This is our target. Hope you are following. Yes, sir. Now observe here. What is the reason? Tell me. Check deposited but not collected. Check deposited but not collected. Okay. You people write down like this. A small working note to be prepared. That is cash book and passbook. You simply write like this. Cash book and passbook. See the reason. The reason is check deposited into bank but not collected. You people tell me who recorded this transaction first? Cash book. Which side is it is recorded? Debit side. By recording it on the debit side, cash book balance increase or decrease? Sir, cash book balance will increase, sir. Cash book balance has increased. When cash book balance is increased, automatically the passbook balance is decreases. Because of this transaction, because of this 50,000 rupees transaction, cash book balance increase, but passbook balance not increased. Na means if you observe the cash book and passbook, compare to cash book, passbook balance is less by 50,000. I repeat, compare to cash book, the passbook balance is less by how much? 50,000 rupees. By how much? 50,000 rupees. Like this, each cause, like this, each cause effect seen like this. This is the first one. So in the examination, suppose if you get 10 causes, 10 causes you have to observe like this. 10 causes you have to observe like this. Very, very important. Yes, sir. I have completed observation like this. So what is the first step? Check in which book it is recorded. Second, in which side it is recorded. Third, because of this, what is the effect on balance? Cash book and passbook. Sir, cash book increases, sir. So upward symbol. Cash passbook decrease, sir. Downward symbol, arrows. Yes, sir. Finally, after completion of each transaction, Which book balance you started with? Sir, we started with cash book balance, sir. Yes sir, no? Yes sir. Now when you start with cash book balance, which book balance you get? Sir, I get passbook balance, sir. Just tick on that. Which book balance we need? Passbook balance, sir. Or else simply make a box on it. Sir, we need passbook balance, sir. Very good students. Sir, I need passbook balance. Yes. Now, upward arrow means plus. Upward arrow means plus. Downward arrow means minus. Here, passbook is showing downward arrow. So, what I will do is minus. This means we started with cash book. You do one thing, from cash book balance, if you deduct this 50,000 rupees, you get ultimately the passbook balance. Tell me. Less. Observe carefully. If you can understand one thing na, then you can understand the remaining things easily. Checks deposited. Write down the reason also. Checks deposited but not collected. Checks deposited but not collected. Over. Now tell me how much amount you are getting. From 1.5 lakh, I am deducting 50,000 rupees and ultimately I am getting the passbook balance. Now you can understand why we are deducting and why we are adding. I already said the difference of cash book and passbook balance, bank balance as per cash book and passbook, maybe because of one reason or multiple reasons. And it is not possible to see multiple reasons effect on cash book and passbook, so that we are taking one point. By taking one point, here we are preparing a small working note. This working note is very important, students. This working note is very important. This working note is very important. For every problem, you people try to prepare this working note. It is not part of your answer, but for our convenience, we are preparing this. You can do one thing. The same working note can be prepared at the end of your booklet. You can just write down rough work and you prepare this. Based on this, you can assign the symbols and which book balance you need? Passbook. Follow the passbook symbols. Plus, add, minus, deduct. Ultimately, if you do all the calculation, finally you get the passbook balance. Here we have second book balance now. So how much is the second book balance? 1 lakh. Here also we got the answer 1 lakh, so that our answer is correct. But in the examination problems, you may have only one book balance. You may have only one book balance. So it is not possible to check whether the answer is correct or not. For that purpose, you have to check the problem once again. Just check the problem within 1 minute. That's it. Our problem of BRS completed. If you prepare the BRS like this, then whatever the problem it is, however the problem it is, that becomes very simple. Now, based on this concept and based on the theory which we have explained, which we understood, now we try to solve the problems. I already said we can do two types of problems. One, before updating cash book, we prepare BRS. Second one, after updating cash book, we prepare BRS. Clear? So during the year, if you are preparing BRS, means you have two options, option 1, option 2. But at the end of the year, sir, how can we check, sir? Simple. Check in the problem that whether the given date is 31st March or sometimes 31st December also they give you. Sometimes 31st December also they give you. In that case, you have two options. Assume that as on the given date, I repeat, as on the given date, if you assume the books of accounts are closed, then what you can do, you can update the cash book and then prepare BRS. Update the cash book, prepare BRS. After updating the cash book, the number of causes gets reduced. Na? After updating the cash book, the number of causes gets reduced. Before updating cash book, the number of causes are more. Once after updated, the number of causes gets reduced. So if you get these dates, 31st March or 31st December, you can write clear assumption. You have to write clear assumption. Here it is assumed that the books of accounts are closed on this date. Accordingly, adjusted cash book or updated cash book is prepared. adjusted cash book or updated cash book or amended cash book is prepared. First prepare updated cash book, then after you prepare BRS. First one, update the cash book. Second one, prepare BRS. Or if you assume that the books of accounts are not closed, then straight away prepare BRS. Then straight away prepare BRS. Up to you. Now we try to solve problems on direct preparation of BRS and after updating the cash book and preparation of BRS. These two types of problems we see. Now next question comes, sir, which format we have to follow, sir? There are two formats now, sir. Yes. One is balance presentation. Second one is plus and minus presentation. If specifically, suppose nothing is mentioned, which presentation to follow? Follow balance presentation. Most probably 99.99% we follow balance presentation. If they specifically ask prepare plus and minus presentation, if they specifically ask prepare plus and minus presentation, then follow the same. Is it clear, students? Right. So hope you are following. Now we try to solve the problems. Look at. Now, before discussing the rectification of error problem solving technique, let us discuss a small example here so that you can understand the rectification process. First, look at. Here I have taken one example. Purchased furniture rupees 1 lakh on credit from Mr. A. First, what is the journal entry we record? This is the first stage. Now, we record the entry. The entry is furniture account debit to Mr. A account. Furniture account debit to Mr. A account. This is the correct entry we record. Next, second one is we have to post it into the ledger. How many accounts we open in the ledger? Furniture account debit and furniture account and Mr. A account. In the entry, furniture account is debited now. So ledger posting also furniture account debit side to Mr. A account 1 lakh. Mr. A account credit side by furniture 1 lakh. After posting, next step is what? Balancing. Observe carefully. Here furniture account is showing 1 lakh rupee balance. Furniture account is showing 1 lakh rupee balance. So by balance carried down 1 lakh. And Mr. A account is also showing 1 lakh rupee balance. To balance carried down 1 lakh. Now with these balances we prepare trial balance. Observe the trial balance. Furniture account is showing debit balance. So furniture account debit balance 1 lakh. And Mr. A account is showing credit balance. So Mr. A account credit 1 lakh. Now both sides are equal. Na? Both sides are equal. Actually, this is the bookkeeping process. Entry recorded, posted into ledger accounts. From these from the ledger accounts, we prepare the trial balance. If the trial balance does not agree, then we have the conclusive evidence that there are some mistakes in the bookkeeping process. Hope you understood. Yes, sir. Now, in the examination, first identify in which stage the mistake is happened. In which stage here, in the sense whether the mistake is happened in the journal stage or ledger stage or preparation of trial balance stage. Ledger stage nothing but posting. Ledger stage nothing but there are some things covered under here, under ledger. First one, posting. Whether the mistake happened in posting. Posting means whether the posting has been done on the debit side or credit side. Posting. Or the amount is recorded on the debit side or credit side, whether the amount is recorded correctly or not. These are all posting errors. Next one, casting. Whether the ledger account is casted properly or not. The total is 10 lakhs, but by mistake I have casted 1 lakh rupee. Next one, balancing. balancing. Sometimes the debit balance may be shown as credit balance, or credit balance may be shown as debit balance. So these three things we need to understand first. These three things. In case of postings, you should understand these three things: posting, casting, balancing, errors. After that, whether the error may be happened in the trial balance, means actually furniture is showing debit balance now. Sometimes it may be recorded on the credit side, or Mr. A account is showing credit balance now. Sometimes it may be shown on the debit side by mistake. At the same time, furniture account is showing 1 lakh rupee na. Sometimes we may write simply 10,000 rupees. Mr. A account is showing 1 lakh na. Sometimes we may write 10,000 or even 10 lakhs also. Sometimes we may forget to bring Mr. A account to trial balance at all. Sometimes we may forget to bring Mr. A account to trial balance at all. These may be the things may happen in the trial balance stage. Okay. Here in the recording stage, what are the various types of mistakes we may commit? We may completely forget to record this transaction in the journal. Here we have recorded, but practically we may forget to record the transaction in journal na. Yes sir, error of omission, error of omission. Or sometimes in the place of furniture we may write purchases na, error of principle. So we may commit error of principle or error of omission, commission, whatever it may be. Means the error may happen at any stage: at the stage of recording journal entry, at the stage of posting, casting, balancing, and at the time of preparation of trial balance also. So in the examination problem, you identify whether the mistake is happened in the recording process or posting process or preparation of trial balance. This is very important. This is the first and foremost step. Tell me first, what will you do? Identify whether the mistake is happened in the journal stage or posting. Posting also at the stage of posting or casting or balancing. After that, or at the time of preparation of trial balance. After identifying this, now we start our rectification of errors, problem solving technique. Hope you are following. Yes sir. Fine. Now look at the step 1. Step 1 is what? Identify in which stage the mistake happened. Not identified, happened. Whether the mistake is happened in journal stage or ledger stage or trial balance stage. After that, next one, follow this. So here we can name it as step 2. Step 1 is what? Step 1. Mistake happened in which stage? Which stage means that may be journal, ledger or trial balance stage. Okay, now second step, look at identify the stage of rectification. Step 1 is what? In which stage the mistake is happened. Whether the mistake is happened in recording stage or posting or preparation of trial balance. Second step is what? Stage of rectification. In which stage you identified the mistake? So identified the mistake means whether you have identified the mistake at the time of before preparation of trial balance or after preparation of trial balance but before preparation of final accounts, or after preparation of final accounts, that means next financial year. Stage 1, stage 2, stage 3. If the mistake is identified or the mistake is located in stage 1, very important, students, observe. If it is stage 1 rectification, if you are rectifying the error in stage 1, then first identify whether the error is affecting one account, whether it may be stage 1, 2 or 3. First you have to check whether the error is affecting one account or two accounts, one sided or two sided. In stage 1, this is before preparation of trial balance. Now this is before preparation of trial balance, means no suspense account is created. I repeat, when does the requirement of suspense account comes? Only at the time of preparation of trial balance. In stage 1, trial balance is not prepared. Okay, so how the one sided error gets rectified? Normally, this stage 1 rectification is possible only in case of manual accounting work, manual accounting system. Under computerized accounting system, this stage 1 rectification is not possible. Why? Because in the computerized accounting system, trial balance gets prepared automatically. After recording of each transaction, it is posted into ledger accounts, and back end the trial balance also prepared. So stage 1 rectification is possible only when you maintain manual accounting system. So in stage 1, what we do, if it is one sided error, go to that account straight away. Suppose if the error is affected, if the error is in furniture account, if the error is in furniture account, assume furniture account the error is. Okay, furniture account, which side identify? Furniture account, which side identify? In case of purchase, then the mistake is on the debit side. In case of sale, then the mistake is on the credit side. Suppose debit side I have written 100 rupees less here. Our furniture account is not at all debited. Now we debit furniture account. Let us say 1 lakh rupee. There is some mistake in the furniture account debit side. You rectify it now. So what we do? We simply write here rectification statement. What we call it? Rectification statement. Rectification statement. Because the mistake is happened in one account only. So we go to that account and go to appropriate side. Appropriate side means if I write the rectification debit side or credit side. If I write rectification on the debit side, then the error gets rectified. If I write rectification on the credit side, then the error gets rectified. Is it clear? So rectification statement. Second, next one, observe. If it is two-sided error, if it is two-sided error, means the error is in two accounts. The error is in two accounts. If it is possible to record complete journal entry or complete rectification entry, you can write down. Complete rectification entry means one account debit and one account credit. I repeat, complete rectification entry means one account debit and one account credit. If it is possible to record complete rectification entry, then write down the rectification entry. If it is not possible to record rectification entry, means let us say, for example, there is one mistake in purchase account. Suppose let us take two accounts here, purchase account and sales account. Okay, just a minute. Let me take one problem and I will show you that. Yes, look at illustration 1 once. Okay, look at seventh one. Discount allowed to Satish 25 has not been entered in the discount column of cash book. It is not entered in the discount column of cash book. The amount has been posted correctly to the credit of his personal account. Means, so here the mistake is in only one account, that is discount column. Discount column is only one account. So how many accounts affected? Only one account, na? Okay. Now come to illustration 2. Come to once illustration 2. Yeah, look at fourth one here. Look at fourth one here. 100 paid for rent debited to landlord account. 100 paid for rent debited to landlord account. Now how can we rectify this? Earlier rent account is not debited, now you debit. Landlord account earlier debited, now you credit. Means here it is stage 1 error. Stage 1 error. Here it is possible to record rectification statement, sorry, rectification entry. That's why for the fourth one here we have recorded complete rectification entry. Observe carefully, complete rectification entry. So if it is possible to record complete rectification entry, then you can write down. Let me take one more example here. Okay, if it comes I will explain, don't worry. Next, look at, yeah, if it is one sided error, then what we do, simply write down the rectification statement on the appropriate side, or simply you can write the rectification statement like this, like this. Simply you can write in the examination like this. Okay, next one, if it is two sided error, if it is possible to write complete rectification entry, write down rectification and complete rectification entry means one account debit and another account credit. Otherwise you can write two rectification statements. This is stage 1 rectification. Important note points here, you need not to prepare any suspense account. Why sir? Why? Because here we have not prepared suspense account na. It means here we have not prepared trial balance. When trial balance is not prepared, you need not to prepare any suspense account. If we prepare trial balance, if we get any difference in the trial balance, that difference we transfer to the suspense account. Means in stage 1 you need not to prepare any suspense account. So what is the indication that whether it is stage 1 rectification or stage 2 rectification or stage 3 rectification? Simple. The indication is simple. The indication is they will not use the word suspense account. They will not use the word suspense account. In that case it is stage 1 rectification. Next, suppose if it is stage 2 rectification. Stage 2 rectification means after preparing trial balance but before preparing final accounts. After preparing trial balance but before preparing final accounts. After preparing trial balance means the difference we transfer to the suspense account. Let us take for example, debit side total is more than credit total, means we transfer that excess debit to suspense account. In that case suspense account shows credit balance, because debit side more na, we transfer the amount to the suspense account credit side. Suppose credit side is more, excess amount, excess credit, means the excess credit we transfer to the suspense account, means suspense account shows debit balance. Okay, so check that in stage 2, whether it is one sided error. If it is one sided error, the error gets rectified by writing complete rectification entry. In stage 2 we record whether it is one sided error, irrespective of whether it is one side error or two side error, we record complete rectification entry. Complete rectification entry. Sir, you may ask, sir, one side error means only one account affected na sir. To record the rectification entry we need two accounts na sir. Yes, you can use the second account, suspense account. You can use the another account, suspense account. Suppose for example, furniture purchased, furniture purchased but it is not posted to furniture account. Furniture purchased for cash means this transaction is recorded in the cash book now, because it is a cash transaction, it is recorded in the cash book but forgot to post into furniture account. Only one account affected. Which account? Furniture account gets affected. Now what is the entry I have to write? Actually furniture account debit. Earlier furniture account is not debited, now I will debit furniture account. But to complete the entry I need one more account na, so I will take suspense account help. I will take suspense account help. That's it. In the furniture account debit side, I will post to suspense account 1 lakh. To suspense account 1 lakh. This is how I prepare. Sorry, I will write rectification entry, one-sided error. If it is two-sided error, two-sided error means two accounts gets affected. Two accounts gets affected. If one account is debited and another account is credited, then it is okay. Or if two accounts are debited during the rectification, two accounts are debited, then what about credit? Use suspense account. During the process of rectification, two accounts gets credited. In that case, you can use suspense account as debit. If it is possible to record the journal entry, if it is possible to record the journal rectification entry with the two accounts, then you can straight away record the entry. If it is not possible to record rectification entry with the two accounts, then you can take the help of suspense account. When problem comes, then I will explain. Next, note point, prepare suspense account. When you are rectifying errors in stage 2, compulsorily you have to prepare suspense account. Sir, what is the indication that this is stage 2 rectification? Means they use the word suspense account only. They use the word suspense account. They don't use the word next year. Suppose if they use the word next financial year, the errors are identified in the next financial year. Next financial year means it is stage 3 error. Next financial year means it is stage 3 error. Do remember, students. Okay. Now come to stage 3 error. We understood in stage 1 how the errors gets rectified. In stage 2 how the errors gets rectified. Now come to stage 3. Stage 3 also identify whether it is one-sided error, two-sided error. Stage 3 rectification is similar to stage 2 rectification, with the exception that, very important, observe carefully. Check the account affected is a nominal account or not. Account affected is a nominal account. See, in stage 3 means we are rectifying the errors in the next financial year. In the previous year, all the nominal accounts gets closed now. In the previous year, see, we have three types of accounts now: personal accounts, real accounts, nominal accounts. All the nominal accounts gets closed in the previous financial year. Remaining accounts carry forwarded means personal accounts and nominal accounts. In the previous year, nominal account is affected. Very good. If you write that a nominal account in the current year now, current year also we open some nominal accounts now. Suppose the mistake is there in the purchase account, in the previous year purchases account. If you write purchase account in the current year also we open purchase account now, because nominal accounts are opened during the year and closed at the end of the year. All nominal accounts are gets closed at the end of the year. Again next year we open nominal accounts. Last year purchase account closed, but current year again we are opening purchase account, and this purchase account is for current year. If the mistake is in previous year purchases account, if you open that purchase account in the current year again, the current year purchases account gets affected now. That's why whenever any nominal account is affected, in the place of nominal account, we use one important account, that is profit and loss adjustment account or profit and loss suspense account. Profit and loss adjustment account or profit and loss suspense account we open when the affected account is nominal account. In suppose salary account is debited 1000 rupees short. Salary account debited 1000 rupees short means now we have to debit salary account. Actually now we have to debit salary account, but salary account is nominal account. Yes sir, in the place of salary account use the word profit and loss adjustment account. And ultimately the other account is what? Suspense account, because we have only one account now, one account affected. And account affected other than nominal account, account affected other than nominal account, the rectification is similar to stage 2 error. The rectification is similar to stage 2 rectification. Very, very important. In stage 3, the only concern is identify whether the account affected is a nominal account or real account or personal account. If the account affected is a nominal account, then in the place of nominal account, use the word profit and loss adjustment account. If the account affected is real and personal account, then you can rectify the error as in the case of stage 2. This is very, very important. So here also we will take the help of suspense account to complete the rectification entry. To complete the rectification entry, we take the help of suspense account if needed. Note point, look at. So here in stage 2, we prepare only suspense account, but in stage 3, we prepare suspense account as well as profit and loss adjustment account. Both the accounts we prepare, and the balance in suspense account automatically gets closed sometimes. If it is not closed, carry the balance, or else you can transfer the suspense account balance to profit and loss adjustment account, and ultimately the profit and loss adjustment account balance is closed by transferring the amount to capital account. Don't forget this. The profit and loss adjustment account balance, it may be debit balance. Debit balance means loss. Credit balance means profit. Whether it is profit or loss, that is transferred to the capital account of the owner. Okay, next, what is the indication that we have to do stage 3 rectification? Means they will use the word next year. The errors are located in the next financial year, or current year books of accounts are closed, next year the mistakes are identified. This is the indication for stage 3 error. Do remember, students, stage 3 error. Now we understood in case of stage 1 how the errors gets rectified, and stage 2 how the errors gets rectified, and stage 3 also how the errors gets rectified. Now we try to solve some problems. Here you can read the theory point that rectification of errors before trial balance. Here I have given clearly. After completion of this lecture, go and read the concept. Rectification of one side error and rectification of two side error. Next, rectification after preparation of trial balance but before final accounts. This is also one side error, two side error. Next, rectification after the preparation of final accounts, stage 3. Here also it is, yeah, stage 1 error, stage 2 means one sided, two sided. But here we use the account profit and loss adjustment account in the place of nominal account. The difference between stage 2 and stage 3 is this is, in stage 3 if you identify any nominal account, in that place we use the word profit and loss adjustment account. Don't forget, students. Okay, now we try to solve some problems, then you can understand the concept of rectification of errors more clearly. Okay, now we discuss inventories problem solving technique. Inventories problem solving technique. Already we have discussed BRS problem solving technique, rectification of errors problem solving technique. Now we are going to discuss inventories problem solving technique. Normally we have different types of problems now. First one is preparation of inventory ledger and valuation of closing inventory. Here comes preparation of inventory ledger. Already we discussed. Here it is not a technique, students. Simply we prepare inventory ledger either by following FIFO method or LIFO method or simple average or weighted average. But the real concept of valuation of inventory technique comes here. Second one and third one. Second one is valuation of closing inventory by adjusting its selling price, and next one is inventory taking. First we discuss valuation of closing inventory by adjusting its selling price. Where it is not possible to value the closing inventory at its cost price, then we use this technique to remember. If it is possible to value the inventory at its cost price, we follow historical cost methods. If it is not possible to value the inventory at its original cost price, then we follow adjusted selling price method. In case of adjusted selling price method, there are two situations. One, closing inventory or closing stock given at selling price. We discussed already closing inventory physically we can count, or the system shows, the computer shows closing inventory as on so and so date. If you follow perpetual inventory system, perpetual inventory record system, if you follow this, then the system shows how much quantity left, what is the selling price of the goods, what is the selling price of the goods. This is closing stock given at, sometimes closing stock is given in the problem itself, but at what price? Selling price. We have to value the closing stock at what price? Cost price. But here the closing stock is at selling price. Then what is the approach we follow? Next up, look at the problem that sometimes they will not give you closing stock information. They will not discuss about closing stock. Look at closing stock information is not given. In that case, what is the approach we have to follow? There are two approaches, students. First approach, calculation of closing inventory when closing stock information is given. Now tell me, closing stock, we have closing stock at what price? Selling price. From the selling price consists two components. One is cost, another one is profit. From the selling price of inventory, if you eliminate profit, then automatically whatever the closing stock is in your hand, that is at what price? Cost price. This technique we follow here. Now take sale value of closing inventory minus gross profit included, or gross profit margin on the above inventory. Here the question comes, sir, how can we get gross profit margin? Sometimes the gross profit margin is given in the problem itself. Otherwise, you should calculate gross profit margin. The formula for calculation of gross profit margin is equal to gross profit divided by sales. Gross profit divided by sales. Here again the problem comes, sir, how do we get the information about gross profit? If you don't have any information about gross profit, then calculate. So gross profit is equal to, how can we calculate gross profit? Gross profit is nothing but the difference between selling price minus cost. Gross profit is nothing but what? Selling value, sales value minus cost of goods sold, or cost value. Here what we do is, we take total sales including closing inventory at selling price. This is very, very important. Here we take total sales. Total sales information is given in the problem. Means sales information is given in the problem, and closing stock is also given in the problem at selling price. Now, in that case, what we do is, we assume that the closing stock also sold. We assume, it is just an assumption, that the closing stock also sold. In that case, the total sales comes after adding closing stock at selling price minus COGS. COGS nothing but opening stock plus purchases. Opening stock plus purchases. Here closing stock is 0 now. Why? Because closing stock we assumed that sold. Even though you have closing stock, but what is our assumption? Closing stock, all closing stock sold. In that case, cost of goods sold is equal to opening stock plus purchases. If any expenses are given, add direct expenses. This approach you have to follow. Simple approach. Observe. First one, this is the direct calculation. Sale value minus profit. Then whatever the stock you have in hand, that is at cost price. If gross profit margin is not given, then calculate. For calculation of gross profit margin, what is the formula? Gross profit divided by sales. So for calculation of gross profit, then what is the formula? Total sales minus cost of goods sold. Means first you should calculate this one. Second, you should calculate gross profit margin. And third one, you have to calculate this calculation. This is the problem solving technique. Simple. And this concept or this knowledge you can apply to illustration 6. Follow this concept and apply the same concept to illustration 6. Observe carefully. Mrs. XYZ or in retail business, following information is obtained from their records. Okay, goods received from suppliers subject to trade discount, packaging, sales during the year, sales price of closing inventory. Means closing inventory is given, but at what price? Selling price. Find out the non-historical cost. This is the hint. Whether to follow historical or non-historical. This is the hint. Non-historical cost of inventories using adjusted selling price method. Here closing stock is given, then which approach we follow? First we calculate gross profit. How can we calculate gross profit? Total sales including closing stock at selling price minus COGS. Yes or no? So here we calculated the same. Look at sales during the year, add closing stock, total selling value. What you have to deduct? COGS. COGS is nothing but opening stock plus purchases. In this problem, opening stock is not given. In this problem, opening stock is not given, but purchases are given. Purchases are given indirectly. How, sir? Here they said this is the value of purchase subject to trade discount and taxes. So from this value, what we have to do? First, we have to deduct 3% trade discount. To that value, we add 11% GST. Then we get purchase value. To that, what we do? Packaging and transportation charges we add. Then we get total COGS minus total. Here we have calculated total COGS and this amount is deducted here. Then what you are getting? Gross profit. From this gross profit, what you are calculating? Gross profit margin. Gross profit margin formula: gross profit divided by total sales. Sales includes closing inventory at selling price, and this percentage is applied on closing inventory at selling price. Look at selling price of inventory 2,35,000. On this you apply 28.909% minus. This is the gross profit and this is the closing inventory at cost price. Hope you are following. So apply this technique to illustration 6. Then you can understand. If you get this type of problem now, you can score 4 out of 4 or 5 out of 5. Very, very simple. Next one, second approach. If closing stock information is not given in the problem, then how? If you observe illustration 8, observe illustration 8 once. From the following, read total problem and tell me, do you find any closing inventory or not? From the following particulars, ascertain the value of inventories as on 31st March 2022. Okay, inventory, this is opening stock, purchases, manufacturing expenses, selling expenses, administrative expenses, financial charges, sales. At the time of valuing inventory on 31st March, a sum of 70,500 was written off. Okay, 50,000 and sales, bearing the transaction relating to the gross profit margin 20% on sales. Here gross profit margin is given, but closing inventory information is not given. In illustration 6, sales closing inventory at selling price is given, but gross profit margin is not given. In that case, we have calculated gross profit. Then how can we solve illustration 8 now? Clear? For that, this is the approach you have to follow. How? We know the formula that closing inventory is equal to suppose I have purchased 100 units minus sold 50 units. Remaining 50 units nothing but my closing inventory. Here 100 units are called cost of goods available for sale. 100 units are called goods available for sale. 50 units are called goods sold. And remaining 50 is nothing but our closing inventory. Simple technique. See, cost of goods available for sale minus cost of goods sold. Then you get closing inventory. Yes, sir. So then how can we know that cost of goods available for sale and cost of goods sold? You have to calculate. Cost of goods available for sale is nothing but whatever the opening stock I have plus purchases plus direct expenses. This total consists of cost of goods available for sale. Cost of goods sold, how can I calculate? You know that cost of goods sold formula, opening stock plus purchases plus direct expenses minus closing stock. But here closing stock information is not given. That's why it is not possible to use that formula. That's why we use COGS technique. Other formula. For COGS, other formula is nothing but sales minus profit on sales. COGS is equal to sales. Total 100 rupees is my sales. From sales you deduct profit. Then what is remaining? Cost. So COGS is equal to sales minus profit on sales. In this problem they have given profit on sales na. Sales information is given minus profit on sales. You get COGS. Cost of goods available for sale minus COGS. Remaining nothing but your closing stock at a cost price. That's it. Simple technique. But here very important note point is, if you get any information about abnormal goods are nothing but what? Suppose at the time of valuation of inventory, Sometimes we value some goods which are defective or which are not sold at its original cost or at its selling price. Some goods sometimes they become defective. In that case, what we do, we value those inventory at less than the cost price. Sometimes we value those inventory at less than the cost price, and those inventories are called abnormal goods. When you get any information about abnormal goods in the problem, then generally this abnormal goods is included in the opening inventory. Means previous year closing inventory is nothing but current year opening inventory. Generally abnormal goods information is given in the opening inventory. In that case, what we do is, from opening inventory you ignore minus, from opening inventory you deduct abnormal goods plus, and these abnormal goods are sold in the current year. That information also they will provide. In that case, the sales information includes normal sale of goods plus abnormal sale of goods. In that case, what we do, ignore abnormal sales. Ultimately what we are doing, we are ignoring abnormal goods cost from opening inventory, abnormal goods sales value from sales. Remaining problem is same. This is very important point. You can apply this knowledge to illustration 8. Look at here. At the time of valuing inventory on 31st March 2021, here they set 1/4/2021 opening. 31st March 2021, 2021 financial year it is closing. A sum of 17,500 was written off on a particular item which was originally purchased for 50,000. How much amount written off? 17,500. But original cost is 50,000. Means the inventory is valued at 32,500. And this is called abnormal goods. 30. So 1,42,100 includes 32,500 abnormal goods. Ignore. Ignore. Immediately ignore. 1,42,500 minus 32,500. Ignore. Abnormal goods cost is ignored from cost opening stock, so that, and was sold during the year for 45,000. These abnormal goods are sold at 45,000. Means this sales of 12,45,000 includes 45,000 rupees abnormal goods. Yes sir. Immediately ignore. 12,45,000 minus sale of abnormal item. Ignore. From opening stock, cost of abnormal item, ignore. From sales, sale value of abnormal item, ignore. This is simple technique. Remaining everything is same. Total sales 12 lakh 45 minus 45,000 is abnormal sales. Remaining sales are 12 lakh. This is selling value. Look at sales 12 lakh minus profit on sales. In the problem they said 20% is the profit on sales. 12 lakhs into 20%, 2,40,000. So deduct 2,40,000, you get COGS. This is cost of goods available for sale. 10,22,500 cost of goods available for sale, and 9,60,000 is COGS. Remaining amount is nothing but closing inventory. This is very simple technique, students. Hope you understood this technique. Yes, you can follow this technique now n number of problems based on adjusted selling price. Clear? Now we try to understand how the problems of depreciation chapter to be solved. Here I will discuss a small technique of solving problems on depreciation. See, generally I have already told you, we discuss commonly used methods here: straight line method or double diminishing balance method or WDV method. Now look at here. After reading the problem or while reading the problem itself, you have to try to make a note of these points roughly. Very important, students. Observe carefully. Look at, I am taking here reference of problem number 1. I am taking reference for problem number 1. Read problem number 1. See, Jain Brothers acquired a machine on 1st July 2021 at a cost of 14 lakh and spent 1 lakh on its installation. Fine. The firm writes off depreciation at 10% per annum of the original cost every year. The books are closed on 31st December every year. Fine. This is the information we have. Required, show the machinery account and depreciation account for the years 2021 and 22. 2 years now? Yes. From this information, what are the various points we have to note? Observe here. First and foremost point is identify what is the method of depreciation. In this problem, SLM. In the remaining problems, it may be WDV or any other problem, other method. Second, what is the rate of depreciation? 10%. In this problem, 10%. Remaining next problems are examination problem, whatever it may be. Next, books closing date. On which date we are going to close the books of accounts? Why? Because generally they will ask machinery account for at least 2 years or 3 years. In some problems they may ask for 1 year. At least you should know on which date we are closing the books of accounts. So books closing date also very important. Next, for how many years account is prepared? It may be machinery account. Most of the cases they give you machinery account or plant account or any asset account or motor truck account. For how many years we are going to prepare this account? 2021 to 2022. This is the basic information. For how many years you have to prepare the account? 2 years. Now what we have to do is year wise collect the information. Year wise 2021. First we have to start the machinery account for the year 2021. Okay. First 2021, either the machinery account started with the opening balance or we start the machinery account with purchase of asset. Some problems they give you opening balance directly. On so and so date, the machinery account is showing this much of balance. In that case, you have to start your account with the opening balance. But in this problem, we have purchased asset on 1/7/2021, and here dates also plays an important role. Look at first what happened. Machinery purchased for 15 lakh. You may ask, sir, 15 lakh how, sir? 14 lakh is the cost plus 1 lakh spent on its installation. Total 15 lakh. 14 plus 1 lakh, 15 lakh. Date also write down. During 2021, what happened? Also write. At the end of the year, 31st December, provide depreciation. During the year, no additional purchase of asset. During the year, already here I have discussed. During the year, what are the entries? At the end of the year, what are the entries? In our problem, during the year, we have purchased machinery. Over. Now go to at the end of the year. What is the closing date of books of accounts? 31st December. Calculate depreciation. Calculate depreciation. In the year of purchase, we have to be very careful. In the year of purchase, we have to be very careful for calculation of depreciation. Why? Because here the asset is purchased on 1/7/2021, but books of accounts are closed on 31st December. In the year of purchase, we calculate depreciation from the date of purchase to the date of closing the books of accounts. From 1/7/2021 to 31st December 2021, how many months? 6 months. For the first year, we calculate depreciation for 6 months and we record the entry. Hope you are following. Yes, sir. Next. After recording entry for depreciation, what is the next step? Balance the account. Here they have asked to prepare 2 accounts. 1. Machinery account. 2. Depreciation account. Machinery account is balanced. Depreciation account closed. Why? Because depreciation is transferred to the P&L account. Yes. So 2021, these are the steps we have to follow. Now go to 2022. 2 years they have asked, na? 2022. 2022 year, the machinery account starts with the opening balance. Write down the opening balance. 2 balance brought down. Again check during 2022 what happened. There may be 2 possibilities. 1. Purchase of asset. 2. Sale of asset. During 2022 there may be 2 things happen. Only 2 possibilities. 1. Purchase of new asset or sale of existing asset. But in this problem nothing is happened. So straight away go to at the end of the year. In this problem no new purchase of asset, no sale of old asset. Straight away go to at the end of the year. What is the end of the year? 31st December. On 31st December, what we have to do? We have to calculate depreciation. From second year onwards, we charge depreciation for full year. We charge depreciation for full year. Why? Because we have asset from the beginning of the year. But in the first year, we have asset only from 1/7/2021. Is it clear? Okay, sir. Depreciation calculated and entry also recorded. Now, at the end of the year 2022, at the end of 2022, balance the account. Here, two accounts we have to prepare. One, machinery account. Second, depreciation account. Machinery account is balanced. Depreciation account is closed. Our problem also completed. So, within 1 minute, if you can write this information in short form, no confusions, no confusions. However the problem it is, whatever the problem it is on depreciation, you make information like this or you write the information like this, you will not miss even a single transaction. Okay, I will show you for one more problem also. Illustration 7 I will show you. Look at illustration 7. Here you will get complete information. Illustration 7, look at. This is just for understanding the sequence or flow of solving the problem. Read illustration 7. A firm purchased on 1st January 2020, certain machinery for 5,82,000 and spent 18,000 on its erection. 5,82 plus 18, 6 lakhs rupees. On 1st July 2020, another machinery for 2 lakhs was acquired. Yes, okay. On 1st July 2021, the machinery purchased on 1st January 2020 having become obsolete was auctioned for 3,86,000. On the same date, fresh machinery was purchased at a cost of 4 lakhs. Fine. Depreciation was provided annually on 31st December at the rate of 10% per annum on written down value. Prepare machinery account. Sir, I understood. Last 3 lines, sir. Last 3 lines I understood, sir. But above 4 lines, I am unable to understand, sir. Something I can understand, but what is this? Most of the students, they will get confused. They start getting confusion from now onwards. First 4 lines. What they are saying? So and so date we purchased one asset. So and so date we sold the asset. On the same date again we purchased the asset. And so and so. What is this? That's why this information you convert into year wise to get the clarity. Okay, now look at how we convert this information into our usable condition. Look at first, what is the first step? Method, WDV method. Rate of depreciation 10%. Books closing date 31st December every year. For how many years account is prepared? 2020 to 2021, means 2020-21. For 2 years account is prepared. For 2 years account is prepared. Sir, they did not mention the number of years, na sir. Yes, but look at the asset purchase date 2020. Look at the next year date 2021. 2021. So they are saying 2020, at the same time they are saying 2021, and they said 31st December they are closing the books of accounts. Means 31st December 2020 they will close for 1 year, 31st December 2021 they will close for other second year. Hope you are following. Now observe carefully. 2020, what happened? If you want to start machinery account for 2020, you have two options. One, with opening balance or with the new purchase of asset. In the problem, they did not mention that this account is showing so and so opening balance. No, on 1st January 2020, we purchased asset for 5,82 plus 18,000. Look at on machinery 1. Machinery 1 purchased on 1/1/2020 for 6 lakhs. We record the entry straight away on 1/1/2020. Machinery account debit to cash or bank account. Over. Again, during the year, what happened? Look at the problem. On 1st July 2020, this also comes under same financial year. Yes, sir. Another machinery purchased for 2 lakhs. So, on machinery 2, this is machinery 2 students. Machinery 2 purchased on 1/7/2020 for 2 lakhs. Okay. Next, what happened during the same year? Nothing happened. After 1st July 2020, straight away they jump to 1st July 2021, means next financial year. But now first we have to complete 2020, go to at the end of the year, calculate depreciation at the end of the year for machinery 1 and machinery 2 by following WDV method. When you have more than one machinery, it is always suggestible to prepare separate working note for calculation of depreciation like this. Not like this, just a minute. This is illustration 7 now. Yes, illustration 7 working note. Like this, machinery 1, machinery 2, machinery 3. Hope you are following. Next. Next, what happened? At the end of the year, balance the account. Here we are preparing only machinery account so that this is balanced, not closed. So 2020 completed. Go to 2021. 2021 starts with opening balance. Now, whatever the closing balance we have on 31st December 2020, that becomes the opening balance. Right, sir. Now check what happened in 2021. So 2021, on 1st July 2021, machinery purchased on 1st January 2020, we sold, sir. Means, to put it simple, machinery 1 is sold on 1/7/2021 for 3,86,000. This is one transaction. Whenever we sell machine, I repeat, whenever we sell machine, we need to account for three things. One, first calculate depreciation. Calculate depreciation on machinery sold till from 1/1/2021 to 1/7/2021. Because 1/1/2021 is the book's opening date. 1/7/2021 is the asset sold date. That means in the year of 2021 we have used the asset for 6 months. Calculate depreciation for 6 months. One transaction. Second, we sold the asset for 3,86,000. Record the entry for this. Third, we have sold the asset. Now whenever we sell asset, calculate profit or loss on sale of asset. This is unavoidable. Whenever we sell asset, calculate profit or loss on sale of asset. Calculate profit or loss on sale of asset. This is another. So don't forget, whenever you sell asset, don't forget to record these three transactions. Yes, sir. This is completed, sir. Next, machinery 3. On the same date, what happened? Tell me. And on the same date, fresh machinery was purchased at a cost of 4 lakhs. Yes, sir. This is one more transaction. Yes, machinery 3 is purchased on 1/7/2021 for 4 lakhs. Record the entry. So during the year, one asset sold, one asset purchased. Next, what happened? Go to at the end of the year. Go to at the end of the year. End of the year. Calculate depreciation. Actually, we have three machines now. Machine 1, 2, 3. Machine 1 is sold. How many machines left? 2 and 3. Calculate 2 and 3. Depreciation from this working note. Here you can calculate. Okay. Next, at the end of the year, balance the account. Here machinery account is prepared now. Just balance the account. Over. Like this, you can solve any type of problem. Any type of problem. First, basic information, 4 things. What is the method of depreciation, rate of depreciation, book's closing date, and for how many years account is prepared. Next, if it is for 1 year, you write the information for 1 year only. You write the information like this. Believe me, students, you will not miss even one single transaction. Everything goes correctly. Clear? This is our problem solving technique for depreciation chapter. Hope you guys are following. Yes. Now look at, we try to solve the problems.